Okay. Good morning, everybody. We will start our panel, and I think Sukhi will join us. So again, good morning, everyone, and thank you for attending the Innovation in Payments and Remittance email event. In this session, we will be discussing mobile payments and remittances, understanding the impact and the opportunities seen across the industry. I am Ababacar Seck, the Managing Director for Africa at RemitONE, and I will be hosting today's event. So we have 1 hour and 15 minutes for today's webinar. For the first 15 minutes, I'll be moderating a discussion with our expert panelists. Then there will be 20 minutes at the end of the session for questions from the audience. Please submit your question via the Q&A button on the right-hand side of your screen at any point during the webinar, and we'll try to answer as many questions as possible at the end of the session. We would like also to send a special thanks to our event sponsors, Vine, Nairagram, Trust Payments, Asia Finance, WordPay, GDG, and Currency Cloud. Please make sure that you visit their virtual booths between the panel sessions, which you can navigate to via the menu at the top of your screen. They would love to hear from you, speak to you about the business challenges you are currently facing, and see how they can support you. Before we dive into the discussions, just a few words about RemitONE, the organizers behind today's event. As a company, our mission at RemitONE is to empower the global money transfer industry with technology and business solutions to provide secure and fair transfer for those who need it most. That's why in 2018, RemitONE launched the Innovation in Payment and Remittances, otherwise known as IPR, to bring together various industry supply chain members to help drive positive change. We are grateful that so many of you have joined this session today to continue this mission with us. Now, I would like to start introducing our 4 different panelists. I'm pleased to start with Mr. Mohamed Jagana. Good morning, Mr. Jagana.
Good morning, Ababacar.
Mr. Jagana is the CEO of Kuringo. Mohamed has been involved in several startups in Africa as an entrepreneur with over 15 years of experience in financial services and biometric technology. He has vast experience in the financial sector in the Gambia with strong governance and leadership skills. In January 2020, he co-founded Kuringo company, providing digital solutions for remittances, payments, and more in Europe, United Kingdom, and Africa. Do I have it right, Mohamed?
Perfect. Well summarized.
Thank you. Good morning, Sukhi.
Good morning.
So Sukhi Srivatsan is the UK Head of Sales and Country Manager at Asa Finance. So he leads the company's international sales, business development, and partnership teams to provide businesses with innovative fintech solutions to all their payments, FX, and treasury needs. So he has more than 12 years of experience in treasury and sales management, including product implementation and FX risk mitigation. Is it okay, Sukhi?
Sounds great. Thank you so much, Ababacar.
Okay, next we have Ed. Good morning, Ed. So Edward Chidavarume is the general manager.
How are you?
Business. Edward is the general manager and business development at Pesa. Edward is a global digital financial service expert with experience in business development, sales, and more. Edward possesses an entrepreneurial approach to business while having excellent knowledge on product development, strategy formulation, payment regulations, and policies in financial inclusion space. I think I have the right, Edward.
Yes, Ababacar. You said it right.
Thank you. And finally, we have Clinton Leask, the business development lead at Payat. Clinton has over 18 years experience in Africa's banking and payments industry, including working at key industry organizations such as Netbank and BankServe Africa. Clinton was also part of the Pesa tour to Asia in 2018, which provided the key insight to developing the rapid payments program currently in development for South Africa. Is it okay, Clinton?
Yes, spot on. And good afternoon, everyone. It's afternoon here in Cape Town, South Africa.
Yes, it's a time difference. So thank you all. So without further ado, let's get into today's panel session. I will start the first question with Sukhi. Sukhi, why does financial inclusion matter today?
Thank you, Ababacar. So financial inclusion matters today because it is our greater responsibility to ensure everyone has equal opportunity, whether a business or an individual, to access affordable and timely financial services and products. Especially if you look at the world of mobile payments and remittances, what we're trying to do is we need to empower communities, give them access to basic needs like food and shelter, but also increase the economic output of the country and level the playing field between developed and frontier markets. And it matters today, especially in frontier markets, because there's a significant portion of the population that may be unbanked and may need to walk several miles to get their cash, which becomes a big blocker. So it becomes really important to empower these communities, whether they're businesses or individuals. And at Aza Finance, we've invested in building infrastructure and connecting interoperability across various payment channels, whether it's bank, mobile, and cash in frontier markets, which all goes towards promoting financial inclusion.
Okay, thank you for your answers. I mean, this question is open to all, even if it was directed first to Sukhi. Any comments, guys, Clinton, Edward, or Mohammed?
Yeah, I think.
Go ahead, Clinton.
Cool. Yeah. So I think some big things for us, obviously, in Southern Africa is the impact that we see in terms of retailers as well. Also coming to the mix quite broadly. We see them playing a huge role in digitizing cash as well, besides obviously playing a role of the goods side of thing. And that's going to be quite key in driving down the cost of cash to deliver some of the services we see that are necessary to promote services like remittances as well into Africa.
Thank you. Mohammed?
Well, I think it's one of the fastest ways to change lives by empowering the unbanked, the underbanked, especially women and youth entrepreneurs who find it very challenging sometimes to have access to financial or bank accounts. So I think digitalization of the financial system makes it much easier for people, especially in Africa. As we all know today, mobile phone penetrations are huge in Africa. And the WhatsApperization of people, everybody knows how to use WhatsApp, so it makes it easier for them to use your phone to be included in the financial system. Thanks. Ababacar, you're on
As for
mute.
me,
We
I
can't hear
want
you.
to add,
Okay. Any comments from your side, Edward? I know that you all are intervening in Africa, and this question is very important for you.
okay. Well, just to add onto the agency for financial inclusion, particularly with the recent pandemic, that is it is to us ensure that everyone is included in the financial services sector. Particularly in remote areas who bankers or to financial is very important for us to power the rally in this instance where we just had the pandemic. The government might to the people who are actually so to them up and empower them.
I think your line is breaking. But okay, let's go to the second question. I mean, for Mohammed, who will start? Mohammed, who delivers right now financial services to the Unbanked?
Today, companies like Kuringo and other fintech companies are expanding the reach to the unbanked by providing financial inclusion services simply by offering them an app or USSD base. They don't need to have a complicated banking system or anything for them to be able to access the payment systems. For example, in the Gambia, we have developed a simple program whereby women in the neighborhood would basically normally would not have access to a digital platform. They're given a small device where they sell tokens for electricity, they sell tokens for mobile top-up payments, and they use the same device to upload credit or repayments to the bank. So these are things that channels that we see in terms of who delivers. The mobile money operators are also part of the scheme that are delivering the financial services to the unbanked, and also some of the MTOs that we have seen recently that have started looking at different omni-channels into reaching people that are unbanked and unserved. But in summary, it's basically the fintech companies, the mobile money operators that are disrupting this market.
Thank you, thank you. Any comments from the other panelists? Sukhi, your experience in Africa, Edward or Clinton?
Yeah, well, don't have a whole lot to add on the points that Mohammed just raised, but I did want to highlight one thing that's quite unique to, at least the African continent. So like he said, there are the fintechs that are providing the mobile wallets, or, you have telco backed mobile wallets, but you also have fintech backed mobile wallets. And then of course there's the cash agent networks. Each of them are really unique to a country or a market. And you need to think about the different regulations and the infrastructure limitations in each market. And I think one important point to highlight here is a provider like RemitONE. You guys are looking to kind of bring everything together and do like a one-to-many integration, right? So through the RemitONE platform, an MTO could connect essentially and push all their remittances with one integration, but to many, many markets. So there are fintechs that are really growing in each of these separate markets, but the hardship and the obstacle is each market is so unique. And how do we all bring it together? So I think providers like RemitONE and Aza Finance are really looking at that aspect. So that's my 2 cents to add to what Mohammed just highlighted.
Thank you for these insights. Other comments? You're on mute. Oh, if okay.
As from my end, I don't have any.
Yeah, go on. Okay, we jump to the third question addressed to Clinton. Clinton, today, what obstacles, legal, infrastructure, or agents are blocking MPOs and banks to really catch up with mobile operators in Africa? You are on mute, Clinton. You are on
Thanks.
mute,
There we
Clinton.
go. So I mean that's quite a big question, and I mean there's a broad range of answers, but I'll zone in on a few of them. And I mean I think the biggest challenge it's always difficult to usurp incumbents. So whether it's mobile operators in Central Africa, or whether it's tier 1 banks like we have in South Africa, I mean, to change things without regulatory or unforeseen market changes is very difficult to do. And I mean, you look at the way legal and compliance is shaping up these days, I mean, those burdens are growing. It's getting more onerous to comply with various things around AML, CFT, FATF, and all the various acronyms that people get grey hair about, particularly for onboarding and monitoring end customers. Particularly as new entrants and smaller players catching up, you have to comply with these from the get-go. Large incumbents or mobile operators or banks actually have more time on their hands because they have this larger market size, so they can play around and delay things with regulators as well. So it makes it much more difficult to catch up. But having said that, though, is it could provide opportunities in terms of working with these larger players to solve some key opportunities or key items that they need done as well. Further to that is obviously looking at accessibility. I mean, it's pretty difficult to build up an agent or partner network to compete with the scale of some of the operations that are there. Furthermore, managing all these networks, the technology around it, settlement and reconciliation can be a serious pain for a lot of guys. And I mean, we can attest to it from a payout perspective. I mean, it's sort of the market that we play in with specializing in building up payment networks. It takes considerable amount of time and effort just alone to manage the integrations, never talk about doing the settlement in that. One of the other interesting aspects we're seeing as well that might be a way in is some of the newer apps coming out in Southern Africa are addressing the cost of mobile data by zero rating it and changing their whole business model around with providing access to news feeds and a couple other things with advertising. So there are definitely ways around it to get some traction. And then a big one is obviously to make sure that as a business you differentiate between what the incumbents are doing. Building like-for-like offering in terms of utility for an end customer or consumer, I mean, it's really not going to help you grow. All it does is it creates a race for zero in terms of pricing and rationalizes the market as well. So pricing is a dangerous one to play because if you're cheap today, someone else is going to be cheaper than you tomorrow. And then you're in the same boat. So where do opportunities exist? I think through cooperation and interoperability between players. I think that's a great way to get around the incumbents. So identify partners to work with, look for niche value propositions, see how you can differentiate. And also important to note, the big guys are like oil tankers. They can't turn very quickly. And if you're a small fintech, a small player, you're a rubber dinghy, you can change course much quicker. So keep nimble and be ready to adapt to change, particularly market-related ones.
Thank you, Clinton, for those insights. I mean, Edward, as you are in the same environment, maybe you can add something before we go to other areas. You're on mute, Edward. So, I mean, as we cannot have Edward is okay? Well, any comments from Sukhi or Mohammed as you are playing in other areas?
Yeah, I'd like to add to what Clinton said, especially around the regulatory catch-up, the technology and the customer mindset and revenues. And these are the challenges that can create obstacles because as Clinton said, some of the big guys are already there. They have a bigger balance sheet. They have a bigger team. But then the good thing is now, especially in Africa, there's a lot of plug and play technology coming in. So there's RegTech, there's other fintech coming in. And if you look at it in terms of how do I partner with somebody who specializes in providing a platform, who specializes in providing RegTech, who specializes in something else, and you focus on the user experience, it would help you grow your footprint. That's what we have been doing at Kuringo. And I think it has really helped us. So I just wanted to add that to Clinton's point. Thanks.
Very interesting, very interesting. Edward, you wanted to add something?
Okay. I wanted to add pretty much on the regulator. We've seen actually the regulator also shift into a more risk-based approach when it comes to FICA and KYC on customers, which also now give the fintech players an opportunity to come up with solutions that enable them to onboard customers easily and in a risk-based approach, whereby customers can be identified via the social media platforms, upload their profile, and you can have API integrations for verifying the documents that you get from the customers digitally, and making it easier and cheaper to onboard customers.
Okay, I think Edward is, Sukhi, what about you? As you are playing in different jurisdictions, any comments on this?
Yeah, not to sound repetitive here, but I think, the controversial statement, which is the banks and these larger players don't own their technology, right? They're outsourcing it for the most part. And when that happens and you don't have eyes and ears on your technology and how it's being deployed, you're going to fall behind. I think that also ties back into user experience. Last week, I was in Senegal and I got a chance to use Wave Mobile Money. And it was a fantastic experience. You were able to pay for things instantly. I didn't have to go withdraw cash. I just showed the concierge at the hotel the scan to pay. He scanned my QR code and he gave me cash. So essentially, look at the way this has rapidly moved and look at how Wave Mobile Money, for instance, has disrupted Senegal. And to Mohammed's point, Kuringo, which I haven't tried and I haven't come across that yet, but it sounds like it's the same thing. So I think we're stating some obvious messages here, but it really boils down to, have you got the user experience down and have you got the right technology to deploy fast and be agile?
Thank you very much. I'm living in Senegal, for your information, and we are living this experience of, I don't want to tell them, but you know what I mean.
Yeah, I know. So do you use mobile money, Wave Mobile Money in Senegal, Ababacar?
They change almost everything here.
The Senegalese market has not been disrupted. It has been boom.
Yeah.
Between Wave and Orange, it's like two giants fighting.
Yeah.
I remember meeting Elizabeth, the founder of Pesa, a couple of years ago in Dakar. We never have thought about this happening right now, but the technology has made it much easier. And effectively, what Wave is doing is tantamount to tap and pay. They're doing basically QR code and pay. So you don't need that much of a burden to onboard. And as Edward said, in Nigeria, they have Verify Me. I think that helps you to verify and using APIs to do KYC. So the technology is definitely disrupting West Africa at a very rapid pace.
Yeah,
very,
it's amazing.
It's changing a lot here. Let's go to the first question for Edward first. Edward, what role does technology and mobile payments have to play in financial inclusion? And what are the main challenges for you? So what role they have to play and what are the main challenges?
Thanks a lot. I think it is for us to not particularly that We are now shifting pretty much from the brick and mortar banks, where the brick and mortar banks were the ones who were actually dominating the financial services market. Now looking at the mobile penetration, the way that it's increasing in Africa, we are looking at pretty much up to 2025, where it's been expected that at least about 50% of the population in Africa will have mobile phones. The banks that were having branches pretty much scattered in the main cities or main towns, where they reach the people that are areas, most people who are marginalized were not absorbed by these banks. They couldn't offer financial services to these communities. So now with the tech and the mobile penetration happening within the sub-Saharan Africa, it becomes easier with technology for us to offer financial solutions to these markets, where you can offer the mobile money solutions. I look at particularly with my experience when I was still back in Zim with EcoCash, where you could reach out to people in the most of remote financial solutions, empower them to have some banking, them to also create a credit rating, and these marginalized communities can also have access to credit. Yet they couldn't be serviced by the promoter banks before. So now you get them getting access to find services and improving their lives. So now with the international money remittances, which is the space that we're in as Cash Pesa, we get an opportunity to even partner with mobile money operators in Zimbabwe, or be it in Nigeria, be it in Kenya, that can be able to deliver remittances to the most of remote where customers not access our banking services. So same to like what I mentioned, that with the recent pandemic, you'd get these are disadvantaged people now even able to get disbursements through from be it World Bank, be it from be it World Vision. People can now be able to access to get disbursements even from be it grants. It becomes easier, and we empower them to become better. And you also look at small scale farmers who are in the remote areas. They can be able to sell their produce and get payments via mobile solutions.
Thank you, Edward. Thank you for this insight. Any comments from the other panelists?
Yeah, so I agree with Edward. Mobile payments is definitely the future and the way it's going to shape. There's no other way to do this and solve for what needs to be done in Africa in terms around financial inclusion. I think the last aspect, because I really think obviously the devices is not a problem anymore, which we saw a few years ago, but it's really ensuring that the cost of data is tackled effectively by regulators across all countries to promote the usage of mobile payments.
Mohammed, any comments?
Ababacar, interesting. I was in an earlier panel in the morning, and one of the panelists was talking about her experience in Brazil, along the beach in Rio. The vendors of coconut juice would tell you, oh, sorry, I'm not taking cash anymore because of COVID, but you can scan this QR code on my necklace and pay for the services. So I think we have seen similar things happening with Wave in Senegal and other West African countries. So as mentioned earlier by Clinton, the cost of data, if it is really looked into, it would push financial inclusion quicker because a lot of people now have the device, which is a mobile phone, which they use mostly for WhatsApp and other social media things. So it's easier for them to be onboarded into the financial platform much quicker than it was 5 years ago. Thanks.
Thank you very much. Sukhi, any comment?
Yeah, I think, there's several aspects to this, right? Like, what are the challenges? Of course, you can say, it's very easy to say, let's have technology in-house, and technology and mobile payments go hand in hand because it makes it more instant, faster, easier, also secure because you're not carrying around cash. Those are all the obvious things, but when you start to really look into deploying, right, and doing the operations, there's so many things to think about, going from treasury management all the way down to operations, managing the teams on the ground, and finding the right talent, right? So there's been a lot of great talent in these local markets, and how do you continue retaining the talent? How do you continue recruiting that talent? And then also bringing technology experts and engineers to help you build out the vision. So that in itself is a challenge. How do you bring the right people on board, and then how do you retain them?
Well, lots of challenges outside. But one thing I would like to, discuss on this aspect, the services we have to add for the customers. Do you think there is something to do?
Sorry, Ababacar, could you repeat the question?
Well, I would like to just, raise one point that is interesting. From the services, the telcos and the mobile operators are offering. Financial inclusion is not only about accessing this, the service. What about, the offering? What do you think that has to be done on this specific aspect?
Yeah. So I think initially, right, when, let's say, for example, a fintech is starting out to build a mobile app, initially there needs to be focus on building one thing and doing it really well and gaining user traction. And then once that's like underway and you have that retention of users, it's important to start to diversify the products and services you offer. So, not just maybe being able to receive money and me being able to send to you like in a P2P manner, but also, can I do other things with this wallet? Can I go and can I buy a coffee? Can I go to the merchant and can I pay for my scarf? So lots of different things, lots of different use cases, but initial steps is start small, build, focus, and then eventually build up and add more products and services so you can diversify and create an entire user experience within your product and within your service.
Thank you. Any other comment on this? Mohammed, do you have you start giving loans?
Well, the challenge we have when we started Kuringo, we identified 3 issues: governance, user experience, and technology. And under governance, we looked at compliance and regulatory. So the challenge we have is our central bank. I hope they're not listening, but if they do, my license might be revoked. It's a little bit of an arcade bank. They're very focused on looking at fintechs like banks, which makes it very difficult. Unlike Nigeria and Kenya, where the regulators have been much more accommodating. That's why I tell them that Pesa was successful because they started before the regulators knew where they were. But unfortunately here, we have to be put in a box, which the regulators don't seem to understand fintech. So it makes it difficult for us to give out small loans or do certain things because of the licensing regulations. But it's been reviewed and we hope that they would relax or put in different tiers or barriers that would make it easier for those services to be offered.
Okay, thank you. They are not listening, huh? So for you. Well, the next question is for you. I mean, Mohammed. How will interoperability between telcos benefit the end users? We've been talking a lot the last years about interoperability in Africa. How this will benefit the end users for you?
To me, or to us at Kuringo, we find interoperability is a must for financial inclusion to happen and to bring the underbanked, underserved, and unbanked to the table. Because in certain communities, it's very expensive for everybody to put up the infrastructure that is required to serve that community. So today, if you don't have interoperability, a certain segment of the society or a certain community would be left out because the cost of doing business or cost of providing the last mile of the financial inclusion journey to them is expensive. So in order to reduce the cost of transactions, interoperability is a must. It can lead to lower cost of transactions, increase volumes, expand footprints, and also it can lead to what Sukhi mentioned, allow people, and I think Edward also mentioned it, to be able to pay for certain things that are basic things in life that they need. Allow farmers also to be able to sell their produce and they don't have to go travel miles to a bank to cash their cooperative checks. So I think interoperability, we've seen it in the UK with the open banking system. It has really allowed fintechs to explode in UK much more than any other European or US system. So I think it's essential for Africa, for our governments to look at interoperability as a key to open access to finance, allow the underbanked to be able to have access to financial inclusion, allow the unbanked to come on board. And today, as we mentioned earlier, I think Clinton mentioned it, the cost of mobiles has been going down, but the quality and the services that you can use on a mobile has been going up drastically. If you look at a Nokia, I think 3210 compared to an iPhone, what you could do in these things at the price point has changed the market drastically. And I think the next big thing is to make sure that interoperability is a must for mobile operators in Africa. Thanks.
Thank you very much. Any comments from the other panelists?
Yeah, I think the interoperability for the telcos, I mean, it's the telcos won't necessarily feel it's the right thing immediately for them to do. But I mean, it is such a key thing for end consumers. And we've seen it in South Africa, not so much on the wallet side, but with number portability across the mobile operators, is that it actually created a boom for them in terms of customers with the mix going on, because people are now able to upgrade and do things much easier. So I think there is definitely strong benefit for this, for interoperability, not only for the consumers, but for the telcos as well. They'll see a rise in transactions for sure.
Sukhi, any idea or any comment? Edward?
Yeah. Comments here for sure. I think, if you benefit the user experience, like Clinton said, the telco will also benefit, right? So I think there's a lot of hesitation when it comes to this from many of the telcos or the bigger players, which is a threat, right? Is my business going to be taken away? I am going to lose revenue over this, and so on and so forth. But thinking a bit more long term is you will get more user traction and it'll create a better user experience. And more importantly, it increases the frequency of a user using your product, right? And that's eventually what you want to get to, is you want to increase the frequency of the person using your app or product. Just to get back to that personal experience, when I was in Senegal, I got a SIM card, put it in my phone, and then I couldn't use my mobile wallet to buy any more airtime because the telco had basically blocked that specific provider on the wallet. So it was a terrible experience for me, because then I didn't have airtime and I was going around asking people for airtime, or I had to figure out a different way, or maybe even get a different SIM card. So it was just not a fun experience. And I think that closed-mindedness and the closed network is actually going to backfire at the end, right, for the telco. And the more open you are, like Mohammed and Clinton said, could lead to a longer-term prospect of retaining users, increasing frequency of users on your app and on your system, and then eventually, lead up to revenue, but in probably a different way. So I think a long-term strategy needs to be key here.
Okay. It is unfortunate to say, but the telcos are the one just, blocking, everyone. Who can force them to, go this direction?
But
we have to
they're
find
given license. They're given license. They don't have a natural birthright to operate in that country. They're given license, and I think the consumer's interest should be forefront. But I suppose most of these big telcos are huge taxpayers to the point that they can decide how to twist the government's arm. But just touching on Sukhi's point, I understand the threat, but as Clinton mentioned, the opportunity is huge. And you can see what happened to the market in Senegal. Today, it has been disrupted so much that there's kind of a behind-the-scene interoperability, where with the QR code scan and pay, it doesn't matter which mobile network you're in. You can buy bananas from a fruit seller, regardless of which mobile operator she's using. You can get to pay the mechanic, regardless of which operator he is using. So in the end, it is better for them to have interoperability and get more people to use the platform, lower the cost of transaction, increase the volumes, so that they can recoup some of their investments.
Okay, right. Thank you very much. We're going to the next question for Clinton. Clinton, what role do the central banks and government have to play in financial inclusion?
Cool, thanks. Yeah, so financial inclusion is quite a broad term and means many things to many people and industries. And I think Sukhi summarized it pretty well on the first question, so I'm not going to get into the details there. But central banks and governments, though, are absolutely key in driving financial inclusion. And it comes from clear and transparent regulation that needs to be put in place with participation from their side and industry. And there's really 7 things that the governments and central banks need to focus on when they look at these type of things. So whatever they're putting into place, they need to ensure, firstly, it's going to be cost effective for everyone. So whether that's end consumers, the payment providers, even the people building the system or the people deploying it. As we mentioned, even with data, so mobile operators come into play as well in terms of that cost effectiveness. The second point is they have to drive competition and innovation. So whatever is going out has to ensure that there's a level playing field in terms of how people can tackle it and how industries can get involved. We touched on interoperability quite a bit, and we know it goes hand in hand with reducing costs and accelerating competition, but also making the pie bigger for everyone. And then also, in terms of that, is adopting standards. So using things like ISO 222 for everyone to technically connecting to a platform solves a lot of the problems around now being hamstrung to a specific vendor, so your costs go down even more. Interestingly enough, in South Africa, where the mobile wallets, so we have VodaPay and MTN's Momo, there is no interoperability between the two, but one of the things that the government is, the central bank is forcing, is they put their directive out on faster payments. And the intention is that faster payments rail that's going to be deployed will allow inclusion for those mobile network operators. They're essentially going to force them to play with. So that'll be quite good for customers. Then there needs to be transparency with clear accountability across whatever's put in place. So when you do a payment, when you work with a partner, you have to know where your money is. Whatever's put into market has to be flexible and adaptable, so it must allow for growth. It needs to be quick. Then also, quite importantly, it has to be secure. You have to ensure that there's financial stability and trust. And then lastly, there has to be a global thought around it. So how do you ensure that whatever you're putting into place connects cleanly? So again, that interoperable play with the rest of the world. So really, those are the type of the things that the central banks and governments are going through. And I think we see some great examples of this happening. So, I mean, India has always been the poster child around how they approach from a central bank perspective in driving innovation. Nigeria is also doing pretty well. And then, as I mentioned, South Africa, that we're now starting to see some traction with their approach in terms of the directives. Thanks.
Thank you very much. Any comments? Who want to add something?
Ababacar, I think I would just want to add also the role central banks can come in is to push for government payments to be digitalized. In Gambia, they started talking about pensions and fuel schemes to be paid digitally. And I think this would also help push financial inclusion, although it's a broader term, but it would allow people to be onboarded much easier. Also, I think central banks in Africa need to look at ways of developing sandboxes. We've seen what happened in Singapore and the Singapore Monetary Authority, what they have been doing with their sandboxes, allowing things to be tested while they can be monitored. And finally, rethink the regulatory framework to allow fintechs to come at various levels and allow them to grow so that services can be provided for at various levels, rather than having a big suit that not everybody can fit into. I think these are some of the things that central bank needs to look into, especially in this part of West Africa.
Okay, thank you, thank you. Any other comments? Or we go to the next point, next question for Edward. Edward, how can we improve the user experience and make it seamless for the unbanked population in Africa?
So I think basically when it comes to user experience, for each and every platform, the first user experience that the customer that you have, or the interaction that you have with the customer, is pretty much onboarding. And I believe when it comes to the information that the customer has to share with the service provider, it's confidential information, and there has to be some level of trust. So when it comes to the way that the user experience is made, or it has to be done in a way that the customer feels comfortable to share that information, and there has to be some form of transparency. On the product and on the that makes the client comfortable, and also the experience has to be easy to use for the customer. Where possible, you have to use, particularly depending on a mobile app or be it on a website, where you have to use icons and not overload the customer with information, or you do away with text. So be it whether you are interacting with the customer, be it on USSD, on mobile app or website, your platform has to be to use. It has to be easy for the customer as possible, ensuring that you can retain the customer can actually come to your platform after their experience, and they have to enjoy the experience using your product.
Okay, thank you, Edward. Any comments from Sukhi, your experience, Mohammed or Clinton?
I think Edward summarized it really well. You need to make onboarding seamless. users should be able to get on and start using the platform quickly, whether they're individuals or businesses, right? And for that, you need to balance both like security and compliance along with a positive user experience, which a lot of fintechs have done really, really well. But then also when they're starting to use the product and doing live transactions, then there's also asking for information that absolutely needs to be there versus asking for information that's like a nice to have. So really differentiating between the must have versus nice to have, especially when you're starting up, is really, really important, right? Do you need these 10 things? And if you possibly ask for 5 things to be uploaded, is it going to disrupt the user journey and basically cause the user to exit, right? And stop using the product. And that happens quite a bit if you start to like add more and more information. So I think the key is, keeping differentiation between nice to have versus must haves. And then also thinking about, okay, which stage are we in? Are we now in a stage where we have a lot of users, quite a bit of volume on the platform? And is it time now to start looking at like the next stage of what we really need in this user journey and what's really important to remain compliant? Because let's face it, right? This is this business, when we're talking about the industry of mobile payments, or we're talking about payments in general and remittances, compliance plays a heavy important role. So we cannot forget about what it means to stay compliant with the regulators, what it means to stay compliant with all the financial authority bodies, and how do you incorporate that as you grow from one stage to the next as a company? Ababacar,
okay, thank you. Any comments, Mohammed or Kulin? Thank you, Sukhi. Any comments from the other panelists? Mohammed, your experience, Clinton?
Well,
Yeah.
go ahead, Clinton.
Yeah, so I think the only thing is, the guys have all touched on it, is, you just got to keep it simple in terms of the engagement with the customer. If it's simple for anyone to go through, then you're going to make a success out of it. And with as many, as fewer steps as possible to make something happen.
Thank you, thank you. Mohammed, you want to add before we go to the last question?
Yeah, I agree with that. Simplicity really is the future. And what we have seen, people are used to social media platforms that makes it very simple for them to be onboarded, for them to use. So they expect anything that is on a phone to be simplified. And today, as you can see in Senegal, with Wave, you don't need an email address. With a telephone number, you should be able to open an account and start making payments and scanning a QR code and start moving. So these are some of the things that I think the platforms and people that design platforms need to really look into. How do we make it simplified? Because everybody in Africa seems to be in a rush.
Yes, this is true. We know that our population, has very specific characteristics, and all the players who have brought very simple to use platform are successful from what we notice. People use their mobile phone to connect, and people use their mobile phone to send and pay. And now with the QR code some operators are offering, it's becoming very easy to use for our people. So the last question before we go to the audience question, and this is directed to Sukhi. What progress should we expect to see in the years to come, Sukhi? And what advancements need to happen for you?
Yeah, this is like a very exciting question, because here we can talk about some very creative ways of what the future is going to look like. Obviously, there's a lot of scope. There's plenty of opportunity, but it's going to require a lot of collaboration, like we just covered. How can governments help? How can central banks help? How can the regulator help? How can the bigger players help? And how can, you know, the fintechs and everybody sort of work together in this ecosystem? And it's not going to be a simple task, right? I think if you look at like the last number of years, a lot of leapfrogging has happened in these emerging markets. For example, in a lot of the African markets, moving from cash directly to mobile money, skipping credit cards and debit cards, you know, you've seen that leap take place. And so what's exciting now is like, what is that next leap going to look like? And we all know we're kind of at the brink of it, right? So what is the next opportunity for the next creative, scalable payment adoption method? And of course, there are lots of challenges. We can't ignore that. But putting that aside and looking at it from a more exciting, positive note, what is that next big leap? Is it digital currency adoption? Can we use cryptocurrencies to enable us to make these payments faster? Is Bitcoin something we need to start thinking about? You know, there's a lot of adoption of Bitcoin and stable coins in many of these markets. And how do we make that more mainstream, but also think about how do regulators and central banks play a role in that, right? In many countries, there's no regulation right now, but that will soon come. So what do? Empower communities with education. So teach people how to use these new technologies, make sure adoption actually happens, but that also means adoption is, can I use this payment method in an everyday use case? Like, can I go and buy a coffee, or can I go and actually have a use case for, let's say, cryptocurrency? So there's a lot of adoption to happen, and there's education, because you need to make sure users are protected and people are using the right methods and not falling into scams to actually adopt a new payment method. And finally, I think there has to be incentives, right? Like, that's basically what users are looking for. Why should I adopt this method? Yes, there's traction, and yes, there's a very easy way to use it, but am I going to get anything out of it? Is it cheaper? Is it faster for me? Is there an incentive if I use this new method to pay? And I think that's what it really boils down to, is how is it benefiting the end user? So yeah, I think there's a ton of exciting things coming up. In my opinion, I think the digital currencies and cryptocurrencies is something we all need to be aware of. The adoption's already starting to happen. We see it in many of the markets, but I think we still have a long way to go. And I'm just personally very excited about the opportunity here.
Well, thank you very much for these ideas and suggestions. Well, anyone who has a comment from the panel?
Yeah, I think Sukhi touched on the one that's quite interesting, and that's obviously digital currencies. I think the one to watch out for is what the central banks are going to do around their CBDC, because I mean, their whole ambition is that they are the custodians then of those individual wallets, and then obviously the impact that has downstream for everyone in terms of MTOs, in terms of mobile operators and banks, because it's sort of shortcutting everyone out of the flow. So that'll be a real interesting one to see. Whether end customers will pick it up or not will be quite interesting. But then also the adoption of DeFi with some of the trade contracts and that as well will start slipping in, and we'll see that solving some of our, well, additionally it'll solve some of the KYC stuff as well, and the fraud items. So yeah, very interesting space around the digital currencies.
Thank you very much. Any comments, Edward?
Go ahead, Edward.
Go ahead. I think you wanted to say something.
No, I think digital
Okay.
and crypto is definitely the future. We've seen the Central Bank of Nigeria announce e-Naira. We've seen the Central Bank of Ghana announce it. We've seen what happened in, is it Puerto Rico? And I know a lot of central banks today are talking about CBDC, the central bank digital currencies. How is that going to impact financial inclusion? How is that going to impact payments? How is that going to impact interoperability? These are things that might even Clinton eliminate interoperability. Because if you have a CBDC wallet and you have your local currency there, you don't need to worry about which operator you're on, because the other person would be able to accept it because issued by central bank. So I think definitely the future is going to be crypto and digital. How it's going to be adopted in Africa, let's see and wait. But it looks like that's the future.
Thank you. Edward, you want to add something?
I didn't really want to add much. I think basically the crypto is just like I concur with everyone. It's exciting also to see how each and every single central bank or regulator in each and every jurisdiction is going to take it take it up. As it is already, we see there's a bit of some hesitation in terms of the regulation, how to go about how to go about it, how they should regulate the crypto. But either way, inevitable. That's the future that's coming, and I guess we have to all brace ourselves and try to position ourselves in a way that we won't be left out.
Okay, thank you very much for your answers. We now, come to the part where we have to answer the questions from the audience. So these questions are directed to all of you. The first question is from an anonymous participant. Are we witnessing a rise in payment gateways in Africa? What's on the horizon for 2022? So first question for all, are we witnessing a rise in payment gateways in Africa, and what's on the horizon for 2022?
Yeah, I'll have a stab at it first. It is possible we might see a rise. I mean, we've probably just had a lot of consolidation happening in the industry already at the moment, particularly in terms of payment gateways. I think it's a difficult one to say whether we're going to see more coming, but the opportunities around the new digital ways of doing things, I think, is going to create the opportunities. But I think there's a lot of appetite to consolidate at the moment.
Thank you. Any other comments on the same question? Are payment gateways, rising in Africa?
Ababacar, I think with technology and accessibility, the payment gateways are going to rise. But we have seen what COVID has done to the whole ecosystem in terms of payments. So definitely it's going to rise. And with people like RemitONE, building partnerships across Africa, the payment gateway are going to attract more transactions and more volumes. That's what I think anyway.
Thank you very much. The second questions coming from Mr. Dedi. The regulators, central banks are pressuring Mtos to bring down prices, forcing Mtos to drop their charges. How can Mto innovate and automate processes by charging less? What new interesting business models are on the horizon? Let me repeat it again. The central banks and the regulators are pressuring Mtos to bring down their prices, so forcing them to drop as well their charges. How can Mtos innovate and automate processes by charging less? And what new interesting business models are on the horizon for you?
Yeah, I can take a stab at that actually. So I think the MTOs are also dropping charges for benefiting the user, right? They want to attract more users onto their products. They want to have users send more frequently. So, you know, what's the best way to do it? Let's drop the pricing. But this is, I mean, it's creating a huge issue because it's creating a lot of price pressure on the other end when you see African based individuals and you know, African entities, or even, you know, any emerging market entity that needs to get money out, right? So I'm not sure if it's necessarily just a central bank pressuring MTO. I think it's also the MTO trying to reduce and make it better for their end user, but it's putting a lot of pressure just on the system in general. And then we all saw what happened last year with the CBN in Nigeria, right? So something will give eventually. It isn't sustainable. And I think MTOs need to start thinking about ways in which they can maintain their own costs. And one thing we just touched on a little bit at the end of the panel was, can cryptocurrencies and digital currencies help reduce costs, right? So whether that means MTOs managing their treasury and their backend by using cryptocurrencies, can they, you know, instead of settling in fiat currencies, can they use the stable coins to make it cheaper and faster? So in terms of managing liquidity, this could be one option that could be considered, right? It's a new interesting business model, of course, has its own challenges, but it's something that MTOs, I think, should start thinking about.
Thank you very much, Sukhi. Any other comments?
Well, I agree with Sukhi to a certain extent. It's a challenge because government and international organizations, including the World Bank, are talking about trying to bring the cost below single digit. But at the back end of it, for example, Kuringo is Africa-based, but we have operations in UK and France. The compliance cost it requires to run those operations makes it very difficult. So how do you balance it? They want you to make sure you have very tight AML, CFT, KYC. At the same time, they want you to lower the cost when the cost of doing that is adding up on a daily basis. So it's a very dicey challenge. I don't know how the government expect to get it to below single digits, but that's one of the main challenges people are facing right now.
So I think the one aspect is maybe cooperation around the KYC, AML, and CFT. So I mean, one of the principles also around leveraging cryptocurrency, well, not in terms of the currency itself, but blockchain, is at least around a common database of users. So there could be trust established in terms of KYC processes to offset costs. So maybe if another organization has done the KYC, perhaps that can be trusted, so you can offset things there and share costs. I mean, the other overlooked aspect as well, which is also a difficult one, is the cost of getting money into your MTO wallet before you sending cross-border. And I mean, there are various different ways you can look at that with the partners as well. But I mean, that's probably the biggest cost potentially in terms of the transaction as well. So digitizing cash. So if you develop more payment methods and promote digital ways of getting money into those flows, it could help get you to those single digits. But yeah, I agree, it's going to be quite tricky.
Thank you very much. Edward, you wanted to add something?
Yes. I think the point that Clinton touched on, it's very important. Basically, the offer collect from the customer is definitely high, and it actually affects the pricing that that product going to be placed to the customer. And also,
we lost Edward, sorry. Well, let's go to the last question because we are close to the end of this session. One last question. Do you think that with the advent of sophisticated mobile apps and push towards digital would mean we will see more companies entering remittances by working with license holders without having to worry about getting a license and bank accounts themselves? This means fintech can enter this space. Any comment on this or answer? Let me repeat it again. Do you think that with the advent of sophisticated mobile apps and push towards digital would mean we will see more companies entering the remittance business by working with license holders without having to worry about getting a license or a bank account themselves? This means fintech can enter this space. I think he's talking about the RAS model and also. Any comment?
Yeah, I think it is a possibility. I think just the challenge is that going to help bring down costs or not as well? So could potentially not, but I mean, what it does is it creates an opportunity for the license holder to leverage fintech partners to create bespoke customer journeys that may target certain areas of the market in different ways. So I think there's definitely appetite around it. I think it's just in terms of how each organization would handle that and work with their fintech partners to make that a reality.
Thank you.
Go ahead, Sukhi.
No, I'm just going to add, it's really touches on KYC as a service, right? Compliance as a service and what we can do in that space. And I think many of the fintechs have the expertise, right? Many of the companies have the expertise, have the compliance knowledge on hand, right? And how can we turn that into a service that we could get fintechs to use? So I think that is key here. Honestly, in my opinion, I think I've seen this trend happen about a couple of years ago, where we have fintechs come to us and ask us, we don't have a license, we don't have a bank account yet, we're very small, we don't have the capital to do all this right now, and we really just want to start off really, really small and pilot this, right? So we've already seen this trend, it's already happening. But I think what providers need to do is they need to start getting ready for this, right? If you aren't ready, you need to already start having that specific license that allows you to be able to offer KYC as a service and compliance as a service.
Thank you very much, Sukhi. One last comment, if any.
Ababacar, I think that's the future on how the fintech industry is going to grow. It doesn't make sense to build everything from scratch if you're at a certain size. So there's opportunities to plug and play and basically roll out. Now the question is at what cost? Because some of the onboarding costs can be very steep and expensive, and these are some of the challenges that the industry really needs to look into.
Thank you all very much for your, answers and comments and ideas you share with our audience. We are at the end of this panel, unfortunately, and we cannot finish all the questions. We really thank you for your time and all the information you exchanged with us. So thank you everyone for attending this panel session, and big thanks to our panelists. We hope you all found the session useful. Our next session will be starting at 1:30, where we'll be hosting an interview that explore alternative bank account solutions. Make sure you don't miss it. We'd also like to thank our event sponsors, find Nairagram, Trust Payment, Azar Finance, WorldPay, GBG, and Currency Clubs. And we want to thank, of course, our panelists, Kuringo, Azar Finance, PayAt, and Cash Pesa. Do make sure you visit the virtual booths of our sponsors between the panel sessions. If you want to review what has been discussed today, we'll be providing a written summary and video upload of all of today's sessions at RemitONE.com in our next RemitONE newsletter, so keep an eye out for that. Lastly, thanks again everyone, and please get in touch if there is anything you would like to discuss regarding the session or how RemitONE or any of our partners can help your money transfer business. Thank you very much, and au revoir.
Thank you.
Thanks, everybody.
Bye, guys. It was a pleasure joining the panel with you guys.
Thank you very much.
Okay.
Bye-bye.